because you sell when price is high. You sell at lower high, a higher price. So on NASDAQ, if you are going to go short, allow price to come back here. It might get there today, it might be tomorrow. Do you understand? So allow price to return here and then wait for rejections like this. Once you start seeing rejection, you see a pin bar or a bearish engulfing pattern. Now, that's key zone. Everybody look up. Samson, don't sleep. Now, price rejected here, and now price is here. We are waiting for price to come to this zone. We want to see rejection. And then a pin bar. A pin bar is a candlestick that has a long wick and then end as a bearish candlestick. That means a pin bar, it will go like this and then it will end like this, red. That means price rejected. Then look for yourself. Are we following? Look for yourself, place your stop loss above the key zone. And then we sell back to this region. If you don't see pin bar, then you can also see what they call bearish engulfing. You see, this candlestick is the important candlestick there. Red, green. This candlestick is telling us that sellers are in full control. This type of candlestick. Very healthy candlestick. So this is an example. Can you see? This is an engulfing, bearish engulfing. A small green candlestick overshadowed by a red candlestick. It's called bearish engulfing. Bullish engulfing is you see a small green overshadowed by a big red. A small red overshadowed by a big red. Bullish engulfing. A small red overshadowed by a big green. Bullish engulfing. A small green overshadowed by a big red. Bearish engulfing. Here it tells us that sellers took control, and look at what happened. You see, whenever you see such candlestick, I've told you, what will you see? You can remember. When you see an elephant back candlestick, a follow through. You see follow through most of the time. You see follow through. That means you will see more red. If it is a green that show up, you see follow through. You see more green. It works 75% of the time. Look at a follow through. You can be sure that the next candlestick that will come will be the same. It will be like a twin. Look at it. Follow through. At least 2 to 3. So this is where we are anticipating for price to come. Back here, retest, and then come down. No trade here. Do we get that? So you go to another asset. Let's say GBP JPY. GBP JPY. GBP JPY is at a place where, oh, sorry. This is gold. GBP JPY. GBP JPY too was collapsing. And right now, it looked like you want to start swinging higher. So if we are going to look for a buy or a sell, mark your key zone. Samson, you didn't sleep overnight. Mark your key zones. And one of the key zones here is this. Why is that place a key zone? Can somebody tell me? Why am I marking that place as a key zone? Somebody tell me. What about this one? Can I mark this one? Can I also mark that place? Can I also mark that place? Yes, it's also a key zone. You'll be surprised that that area price will get there and then continue lower. So if price gets here and it doesn't break this level, wait for rejection. Wait for rejection. Why? Because the prevailing trend is even bearish. So here, price can equally make this previous support that has become, you know, it was a support before, it broke it. This support here, price went lower, it can make it a resistance. And look at what happened there previously. When price came here, somewhere around that area, there was a reaction there. Even currently, you see that price is ranging within that area. So price can actually react here and continue lower. Your setup don't have to be perfect. All right? That's the idea. Your setup don't have to be perfect. What should be ideally or near perfection, what you should master is your risk management. From my studies of the chart, I have discovered that some even setup that you think will not work are the ones that works. And reason is this. Liquidity provider also know where traders are likely to pick their trade from. Let me explain who a liquidity provider is today. Now, ideally, when you want to trade, I mean, some of you have not asked the question, if I make profit, who is giving me the money? Who is paying me? Have you ever thought of that? If I make profit, who pays me? Where are they getting the money from? There's what we call LP, liquidity provider. They are the one giving you the access to funds. Then we have what we call the broker. And then we have the trader. You see, ideally, this guy needs this. But because he can't go directly to this, he needs the broker. So anytime you open an account with a broker, the broker, and you fund that account, the broker is supposed to transfer your money to the liquidity provider. Liquidity providers, some of them are banks. Not Access Bank or GTB Bank. They don't have such power. They don't have such money. Not, when I mean power, you understand what I'm saying? They don't have the capacity. Banks like JP Morgan, HSBC, Barclay Bank. Am I correct? I'm not sure. Something is wrong there. When you spell something and you are not correct, something tells you something is wrong where. BAR? So, Barclay Bank and so on. Then also there are some liquidity providers. They are, how can I describe them? Okay, they are people who sell gold. I've seen liquidity providers in Dubai. They are dealers of golds. These guys are dealing with massive, they are not retail stores. There's a broker I work with that was using one of these gold, what's the name they call them? Oh, no. Why is it flashing, going off and on? What is it called, these gold people? The name is coming off and on. When I remember. So, this liquidity provider, they have funds. They have funds. When you trade and you make profits, and you initiate withdrawal, liquidity, you tell your broker, I want to withdraw. Your broker will tell liquidity provider, this account, that's why they give you account number. It is not your name that goes to the liquidity provider. Your name remains with the broker. Your broker will send your detail to liquidity provider. Liquidity provider will give you a unique number. That's why you can have an account number 500-121-102. So now when you ask for withdrawal, the broker will now send this number to liquidity provider. The liquidity provider will now send the money back to the broker. The broker send the money to you. This is the ideal way, the normal way trading goes. Broker makes money from commissions. Commissions, swap, spread. Which other one? Which other way do they make money from? I think one more. So commission, swap, spread, and co. Some collect transaction fee. So that's why you will see some brokers, when you want to open some account from them, they will tell you you will be paying certain amount for one standard lot size. Let's take EXNESS for example. They have different accounts. They have standard, they have zero spread, they have raw account, they have pro account. On the raw account, for one lot size on some asset, I think they charge almost like $7 or $14. You just see that there's a deduction on your capital. That's commission. So those who are not making money directly from your commission, they make money from the spread they give you. That's how brokers make their money. Ideally, why your transaction is you and liquidity provider, and these guys too are trading. These ones don't trade. So it is a myth for a trader to say the broker is trading against me. It's not true. The only manipulation the trader can do against you is to widen your spread. All right? Use spread to manipulate your trade. Then use slippages. That's what they call slippage. Let's say during high volatility in the market, price stopped at 1.320. Broker can push that price to 1.3. Let's say it's going down. 1.2315. It looks like there's no much difference, but there is. Maybe that's where your stop loss is, or that's where price will get to your account will crash. But if the price got here, it may not stop you out. Your account may not go. But the moment price go there, they will take it there and return it. So you will see the wick. But you will not see the body of the candlestick there. It will go there and it's like a flash and come back. If you check other broker, you will not see the same. Then they will now reset the price back to the original condition. So that's the ideal way it happens. Now, these LPs, they also trade. And they are always looking at what is prevailing in the market right now. What strategy people are using the most. Do you understand what I'm saying? There was a time trend line was really working very, very well. One price get there, it will bounce and people make money. But now it's not working. Because liquidity provider knows that majority of the traders are waiting for price to get there to trade. So when price get there, they sweep it. That's where this concept of liquidity sweep came from. So new traders started thinking, okay, there's what they call liquidity sweep. I must wait for price to liquidate. Liquidate. I hope you understand that concept. Liquidity sweep. I'll wait for price to liquidate a particular area before I enter. What that means is this. You must understand everything that goes on in the market and then be mentally prepared to take advantage of it. Let's say this is a key zone, all right? Price got here, bounce. Price got here, bounce. It's a key zone. So meaning that if price comes back there, traders are waiting to trade here. Correct. Now, liquidity provider, they will now do a fake breakout. They will make the price not to stop here. They will take the price down. Many people will have entered because they will have entered immediately price get there to do what they call sniper entry. I pick it from the bottom. Do you understand? So many traders will have entered here. Then they take the price below. To do what? To clear their stop loss. So once their stop loss has been cleared, then they now return the price. Do you understand? So some traders now, they've cut that scope from LP. So they will now wait for liquidity. So they don't trade without them seeing liquidity sweep. Let me show you an example of liquidity sweep. On which asset did we check the last time? The last one we checked was NASDAQ, right? Let me show you an example of liquidity sweep. Let me see. You said there's a liquidity sweep here, but it's not here, but it's small. GBP. Okay, GBP USD. Where is it? Now it's taking us far. Let's just look at somewhere here. Now, look at this place. Look at where price is rejecting from. So we see it well, okay. Let's go to, let's say, somewhere like 15 minutes. Okay, now, look at, price was rejecting here before going down. Look at what happened here. Look at those big candlesticks. It looks as if there's going to be a breakout. All right? See this candlestick. Red came. There was a doji here. this one went up. Probably some traders have entered sell by seeing this, that's bearish candlestick. They enter sell and put their stop loss above the candlestick. Look at, they allow price to go up and then price came down. This is a liquidity sweep. Some can be bigger than this. Do you understand? I think what happened to us that day was a liquidity sweep. Yes. That GBP. Okay, this is it. Yes. This is that same setup we had. Yes. So you see, they took us out and then they went to our TP.
No, we went for the buy.
Was it buy we pick? Was it sell now? Eh.
On Friday that we now that's the low we put our Friday. That's another level.
Okay, this one here.
Yes.
Okay, this one where we put our stop loss.
That low. That was low.
Here. Come and show me.
That day we put our stop.
Okay, this was our trade.
Yes, this was our trade.
Okay, exactly. They came down here, took out our stop loss, and then took the price up. Now, those who are selling here too, they took the price up, took out their stop loss, and came down. So there are traders who now said, okay, if that is the case, I will not be entering a trade until I see a liquidity sweep. Do you understand now? It's a new system of trading and it has been working. The advantage there is that you will miss some few trades. Do you understand? You will miss few trades because many of the trades will not have liquidity sweep. Do you understand what we are saying? So back to where we were coming from. Thank you. So there are traders right now that they will not trade unless they see liquidity sweep. Okay, so on NASDAQ, we are saying let's allow price come here. We look for rejection and then we return price back here. GBP, JPY. How are we going to trade it? Let's wait and see what's going to happen here. If price respects this key zone, by rejecting, we can sell further. Let's go to AUD, JPY. AUD JPY has been doing recently lower low, lower high, lower low. Do we understand? This is a key zone. Do you know what we are expecting here? Two things. Either a breakout or a liquidity sweep. And then we sell further from here. If it breaks out completely and then is doing a higher low, then we can consider a buy. But if this setup, if this price action that is taking place here now, if it fails from going higher, then we sell down. Very simple. Do you understand it? So this is what you will do every morning, and not necessarily that you have to pick a trade. Not necessarily that you have to pick a trade. This is CHF JPY. That area is an area of rejection. We are expecting prices to go lower from here. So probably price comes back to this area and then we see a rejection to sell. So what we are always, okay, I think, did I enter this trade? Because I put a setup there. And it has gotten to TP. Was it me who did this one? I can't remember, but I don't trade the USD.
Oh yes, yes, on Friday.
On Friday.
Yes.
Okay. No, we saw it on daily that it was buying. Then on 1 hour it looked like it's selling.
Yes.
So did we pick the trade? We didn't pick the trade, we only did the setup.
Yes, now.
Euro JPY. A break above this level, then we can expect it to buy back to this, to buy back up here. A break above this level, we can expect it to buy back up here. Someone sold this card JPY from here and took it down here with $800. I think she got like 4,008 from that trade in 48 hours. So she left the trade for 2 days. So who come and OJ, come and tell us what we are going to do on card JPY. Come quickly. Yeah, what we want to do now? Which one is do as how? To come and hit it. Oh yeah, come and tell us what we'll do. Analyze, yeah, analyze.
Thank you, Jerry.
Analyze it. This card JPY. Quick. 5 minutes. What is your, okay, now this is it. Your analysis does not necessarily need to correlate with ours, but you should be doing the right thing. Because in trading, when you are buying, somebody is selling. When you are selling, somebody is buying. You should be doing the right thing. That's what matters here. Not necessarily that what you are saying now should correlate with my own bias. For example, for me now, in this trade, I would love to buy. But you can look at the trade and say, sell further. So what are we supposed to do? Based on everything that we have been looking at.
Wait now.
Oh yeah, quick. You have less than 5 minutes.
We will look for our key zones.
Okay. Oh yeah, let me mark it. But you have to be doing this thing by yourself. Oh yeah, let's mark the key zones. Where am I marking?
Mark.
Where? Okay. You say I should mark here. I should mark here.
Yes.
Okay. Like this or like this?
No.
Like how?
You should come down small.
Sir?
It should come up small.
You should come on small. Ojo, yeah, be fast, be fast, be fast, be fast, be fast. We have a lot of things to do today. Like this?
You mark. Yes, you mark here too.
Okay. Okay, we should mark here. So what are you expecting? Why are you marking these areas? What are you expecting? Thank you, sir.
We're expecting a buy.
How? Okay, you want to buy. So why do you want to buy? Why do you mark this area? Quick, OJ.
There's an equal low here.
Equal low where? Where's the equal low? OJ, where's the equal low now? Oh yeah, now talk. Samson, come and help him. What are you going to do? What will be your bias? Let's assume that we have resumed office now. We want to analyze the market. You are looking at CAD JPY. Samson, you are looking at CAD JPY. What are you supposed to do? OJ, now sit down, pay attention.
Okay. First off, this key zone is valid.
Okay.
It's valid.
This one is valid, right?
It's valid.
Okay.
And this too. It is very, very essential.
It's essential. Okay.
Essential too. So all I would do is I would wait for market to get here,
Okay.
to react, reject, so to speak. Then I would sell. I would sell towards here.
Okay.
Sell towards here. That's what I would do. Like first action.
Okay. Your bias is towards selling.
Towards selling.
Towards selling.
Because I
from
believe
here
that
to here.
it will reject around here. Looking at what it has done recently.
Now, if you sell from here to here, hope you know that what you traded here was a range. Was if you sell from here to here, I hope you know what you traded.
What if let's look at a smaller time frame?
Yes, on a smaller time frame you will see a trend, but here is a range. You must have that idea. From here to here may likely work if price rejects here.
Ideally, we don't trade sideways.
Yeah, ideally you should not trade sideways.
We can still scalp.
Of course. What you have done from here to here is a scalp. If you trade from here to here, it's a scalp. Look at the distance. But compare it to somebody who picked a sell from here and landed it here.
Reason for my bias, only because I'm looking at the fact that it is very, very, it's still leaning towards the bearish.
Yeah, towards bearish. So you are looking, you want your bias to align with the prevailing trend, which is not a bad idea. So what I just want to be sure of is that you understand what we are doing. Areas where price reacts and rejects is where you are looking for what to pick your trade from. So if price rejects here, you can sell down back here. For every rejection that you see, you will see price pulling in reversing. For every rejection, if the rejection is to the buy side, price will reverse. That's how trade behaves. If it is to the bearish side, if price rejects, price will reverse. Do you understand? Do you understand? So every area of rejection will always bring reversal. So it is the reversal that you are trading. And that reversal could be a continuation of the prevailing trend. That reversal could be a halt in the pullback. Do you understand what I'm saying? It could be a stop of the pullback that it was doing, and then you continue with the trend. So you are not wrong. It is your bias. How you will trade is not what I will do for you. But what I want to be sure is that you know exactly why you are doing what you are doing. Areas of rejection. This is an area where price gets to, and look at it. It was previously a minor support, and then now it's becoming a resistance. Price is getting there, is rejecting. Look at this low here. Price got there and stopped. If price break out of this area, then we should be considering longing it back here. If it breaks out of here. Do you understand? And if price breaks below, then we should be looking for sell. If price breaks below this level, we should be looking for sell towards this area. Now, why am I picking this area? It was area where price rejected before. So if price breaks below here, this is the next leg. It has to make sense. It has to make sense. This is Euro USD. Euro USD is right now as post-trading activity. There is no way you can trade what you are seeing here. It's going to cost you a lot of stress. See what is happening here. So trading idea here is to see manipulation before distribution. Manipulation is that, what do we call it now? Liquidity sweep. I feel this guy want to go up. I feel so. He can now do something like this. Take out this low here and not get here. Might not necessarily get here. From here, it goes here. But right now, it's not tradable. It's ranging. So, you avoid it. That's why we have about hundreds of assets to look at. And the beauty will be that every one of us will be looking at different assets to trade. This is a bearish trend, so we are looking for sell. USD card. In fact, sell might start coming from where it is now. Once it is done doing this ranging, it might sell further. But I hope you know you are not trading from here. You are only using this to check your trend bias. You have to switch to microstructure. You have to switch to microstructure. Okay, so that will be all for today. Yes, yes.
This USD CAD, mentioned as only traded 48 hours.
48 hours.
What was the bias?
Sell. Yes. That's card. I'm coming. Let me bring it out. Card JPY. A bias is very simple now. Look at it here. This was a bias. Key zone. She saw this rejection. Remember this pin bar. Price got there, then came back to the test to do a lower high. From this retest, she took it. Do you understand? From this retest, this is bearish pin bar. she entered the trade from here and then she took it here. Her stop loss was, I saw the trade, her stop loss was above the range. Now, if you entered here, and place your stop loss here, the trade will still go your way. However, the first thing is that for the next 1, 2, 3, 4, 5, almost a few days, it will still be on drawdown, but not hit your stop loss. And some traders will panic. They will quickly close the trade. A full day, they will have closed the trade. If you go to 15 minutes, that's a very, you will see all kinds of candlestick, all kinds of drama. But what happened here, which some traders do too, some traders always wait for a retest, for more confirmation. It's good because it helps you to be more confident and sure of your buyers. However, once in a while, you will miss the trade. Because once in a while, it doesn't do this. It will just go. So you can be a patient trader and say, let me wait for a retest. This is a very good. You see, anything that happens on a higher time frame is almost fact. Any candlestick you see on a higher time frame is genuine. This pin bar is a very good indicator to come into the trade. And look at, see the follow through candlestick. Came back here, wanted to react, collapse further. That was our trade. It's a key zone. Price got there and then respected that key zone. $800, and she went with good money for 2 days. It's worth it, right? Like almost like times 4 of the money. Yeah. She doesn't need to trade that week again. Just chill. And that's what the kind of trader I want you to be like. Not the trader who will be in and out, in and out, in and out of trade. Pick 1 or 2 trades in 2 days. Max in a week, you are trading just like 3 to 5 times. Max. 1 trade per day. If that trade doesn't come, switch to the next day. And once one trade comes, wait for it. Any other question? That will be all for today. So, assignment for everyone. Go and mark key zones from 10 assets. Wait for the action, then pick your trade based on your buyers. 10 assets. Use lot size 0.10. So, by Wednesday, you will now see the outcome of your trade. 10 trades, 10 assets, analyze them, including BTC. This Bitcoin, and pray it gets to 20,000. So I'll just go and stock like 1 million into it and leave it till the end of the year. If it gets to 20,000, that will be very good. This is a massive crash in the history of markets. A massive crash, all the way from 120,000. He hit 50 something, almost 50 something. 59,000. Let's say somebody just sell from here, from that 120,000, and is still holding it in now. That's a lot of money. That means since October 2025, Bitcoin has been crashing every month. Some people have wept seriously because most people's bias is always to buy. Yes. Yes.
So sad that there is no previous candlestick for that time. Is that when they started changing?
Sir?
Like no previous candlestick.
Previous candlestick, okay, like this. Yes, it's loading at this 1 month. That's why it's like that. Okay, the server I'm on. Yeah, if you go to other server, you will see some other. So I think that's all for today. Simple setup. Simple setup. Yes.